Sandip Sabharwal is also joining us. Sandip, anywhere and everywhere, wherever there is a PSU play, it is just getting stretched on the upside. Would you caution our viewers as well, or you think that this rally is actually on the back of the earnings which are earning momentum in many of these PSUs, so is justified?
Ajay. So in some PSUs, there is earnings momentum. For example, if we take into account sectors like defense or sectors like maybe shipyards or a few PSU banks, etc., there is earnings momentum. But in a lot of other companies, it's business as usual. So what's happening is that a set of PSU stocks have moved up. Then people are seeing what stocks have not moved up and they are trying to buy into that. Now, what people need to recognize is that PSU stocks are no longer cheap. Many of them are trading at 30-40 P ratio also. And some of the, for example, financial power finances like PFC, REC. So they are trading at par with valuation or a premium with some of the private sector, like for example, Axis Bank. So a lot of in some cases these valuations are not deserved. Right now, there's too much frenzy, and many of the companies are operating the same way they used 2 years back, 5 years back, 10 years back. So I think there'll be some reality check 2020.
Taken. So that's about the public sector entities. But we've been speaking about the series so far, how it's been the best in almost 38 series. Nifty Bank has also managed to do the best it has in the last, 8 or 18 series, actually, if I have it right, somewhere around that number. But the more important bit was that Nifty Bank has actually managed to outperform Nifty this time around, and that's happened after almost 7-8 months. Let's go across to Ansh to find out some more of these interesting snippets. Ansh, tell us what's been your reading and the key analysis that you've done around this series.
Yes, so Nifty has not just been touching record high levels, but it is on track to register biggest single series gain in almost 34 series. We can say 3 years as well. Nifty is up around 8% this series, led by Adani Ports and Adani Enterprises. The rollover so far is around 72%, which is lower than the 3 series expiry day, which is of 77%. But this is just a temporary number. The final figure will come post-market. We have collected data for the month of January series, and as per that, in only 1 out of 5 Jan series, index has been in green, giving an average return of minus 0.6%, which is a bit of negative news for the next series. Talking about Nifty Bank, which is also expiring today, the index is up around 9%, which is the biggest single series gain in 14 series. Also, the index is outperforming Nifty for the first time in 8 series. The index is led by Punjab National Bank and Bank of Baroda. The rollover so far is around 71%, which is again lower than the 3 series expiry day average of 82%. And as per January series seasonality, we have seen 2 out of 5 Jan series in green, giving an average move of minus 0.2%. So almost neutral to flat sentence stance over here for the next series. Also, it is interesting to note that Nifty premium is around 180 points as compared to the premium of last 5 expiries on closing basis, which was on average near 130-135 points. This shows that future traders are willing to pay extra compared to where Nifty is currently right now. This is a positive sign for the market. Also, FI total long positions in index futures is around 63% compared to the start of the series where it was at around 36%. Now, if we talk about stock specific, 85% of total FNO stocks seems to be trading in green, with Hindustan Copper, National Aluminium and Steel Authority being the top gainers of the session.
Thank you very much for that. That's the series gone by. Graphics also coming up, but lots to discuss. But let's go across to Nooresh and Kunal also, who's joining us to discuss charts for a moment. We are appearing to be heading towards 21,800 once again. Nooresh, analyzing the markets the way you are in the last half an hour of trade, it's shot up again, and also your picks of the day.
So the momentum continues, and there is no point fighting the momentum as such. It's best to ride it. On the upside, the next target point continues to be that 22,000, 22,200 mark. The stock I would be watching out for is ONGC. So the way we've seen a lot of power stocks do well, it is about oil and gas, a similar momentum being built up. ONGC is the one which has been the biggest underperformer, and the stock has done nothing for the last 15, 18 years. And in the short term, also breaking out. So ONGC is the stock.
Point taken, but what about you, Kunal? What do you make of the moves that we are seeing in the public sector entities, overall market texture, ITC bouncing back?
Yeah, I think it's a good sign that you're seeing the laggards back again, like ITC, which have been, I would not say laggards as such, but over the last 2-3 months, maybe some bit of underperformance which had come into the stock price. So hopefully, with the end of the current series, we could be looking at a fresh bout of momentum coming back into ITC, and such kind of moves, which typically happen on the expiry day, tends to have a follow through or a spillover effect into the next series. So expecting the same for ITC. And also with the PSU lot, I think today it's been an all-out PSU basket rally, right from OMCs towards many of the defense stocks, etc. There are so many sectors which are looking quite strong within the PSU basket. So I think it's the streak of momentum which has been going very strong so far this year for the entire PSU basket, and it looks like that this momentum should continue forward.
Sandip, what's your view on metals? And Ajay was just flagging out that seems like some of the aluminium names are better placed because of the cycle. Copper is also something that a lot of global brokerages have been talking about, how with the entire transition in the electric vehicles, the demand of copper is likely to go up. Do you fundamentally see a reason to buy these stocks, or given the moving parts, one should just stay away?
I would say metals are contrarian bets for 2024. They have not participated in the big rally. And a main reason for that has been what's happening in the Chinese economy. Now, there is a possibility that we'll see rally in these stocks as long as the Chinese economy does not slow down further. So, as a contrarian bet, I would think that these could be good trading ideas for 2024.
Specific names there, Sandip?
So, among the large caps, I would say that something like a Tata Steel could possibly do well. Some of like the iron ore story is also looking decent. On Hindalco has already done very well, so there's a possibility Vedanta could come back. The only spanner in the works there is the huge debt of the parent and what happens to that. So that if there's a revival in metals, typically the weakest player does the best. There's a possibility Vedanta could do better. So I'm not buying metals at this stage, but I still think that they could contribute.
It's interesting, especially a formula that when there is a revival, the weakest link actually rebounds the fastest. That's experience. Nooresh, let's talk about some of these metal related plays. Like, look at how Man Industries, a metal pipe manufacturing company, has shot up 8% in trade. They've just flashed off on the exchanges that they would be entering some new area, hydrogen pipes, I think. But we have seen this stock come back from 280 to 90 every time back to 220 odd. Do you think this time it can cross that level and go to new territory?
So if you look at Man Industry and the whole saw pipe sector, these names have come up after 10 years of almost zero return. So Man Industries caused that 2010-12 highs of 250 very recently. So the base is set over the last 2 months. 240 has been the low 3-4 times, and 280 to 90 has been the top. The trend is positive, so I would expect it to slowly and steadily go higher. And the whole sector looks promising, whether it is a Welspun Corp or a Jindal Saw. These are names which are coming off after a 10-12 year consolidation and could continue to slowly and steadily trend up, remain a buy on dips.
Sandip, have you looked at this saw pipe, metal pipe kind of category? Do you like any name there?
So the segment is done extraordinarily well. Like you see, Ajay, this year, right from Jindal Saw to Maharashtra Seamless to many of the other is driven by both global demand as well as the demand under the entire Jal Se Nal scheme and other investments. But after this sharp run up, it's tough to find value. So the order flow is still decent, but then the valuations are very, very high.
Can Kunal, your view on a couple of these big buzzers? Suprajit Engineering is moving on good amount of volumes right now, and Z Entertainment, I think from the bottom of the day on account of some of the reports that some of the deals were falling off, has actually bounced back. View on both of these counters?
So I think Z could be interesting because the stock on the end of the expiry and typically with such kind of moves generally invites more short covering. So I think the end of the day data would be very interesting to watch because when we've seen the trends for Z over the last 3-4 months that the stock has gone into those odd periods of rally, it comes into ban and then the stock gets into a sharp correction. So we need to see the rollover of positions, how sharp it is for Z Entertainment. Suprajit, on the other hand, I think is a classic candidate where we've seen a price volume breakout today. The stock breaking past about the 385 hurdle for Suprajit on the back of some extremely encouraging volume. So that becomes a support now for anyone who's looking at a fresh long at current levels.
Okay, were you going to say that Z has been entertaining?
Yeah, it was entertaining.
But because it has been entertaining, it has had all those ups and downs in terms of the Bollywood drama, what's going to happen.
The buyer wants to throw the current management out and all of that.
And yeah, it's been like that. Emotional drama has also been there. There has been a corporate tussle, so it's been nothing short of a Bollywood
But you have to
movie.
give it so far. The current management has been pretty,
Solid in the sense that they're not going to
budging from the
wanting to go
position.
away.
Yeah.
But let's see what happens in terms of for the investors and of course for the stock price. But let's do one thing. Let's take a breather on the show. But as we do that, listen into the voices coming in from Sameer Arora and Gautam Shah. Both of them were very circumspect about Jan series just because November as well as December have been fairly heady for us. Listen in.
The number of IPOs, you look at it in 99, 2000, you look at it in 7, 8. The number of IPOs, if they increase beyond a point, generally they bring down the market because then in the end, some few IPOs start failing and everybody realizes it's not free money. India looks the most logical beneficiary of any reduction in flows to China, and any reduction has a high probability that there will be a reduction. It doesn't have to be zero. It doesn't have to be negative. It just means the new flows, at least they have to have.
As we get into the month of January, be prepared for some volatility, some weakness, some correction. But I think it's going to be rotational in nature. On the Nifty itself, our working target is about 22,300. So as we get close to that number, I think it might make sense to take some profits off the table and maybe work with a trailing stop loss of 21,200, or even if somebody's comfortable, 20,900. So while the index might not be so relevant right now, I think there are opportunities in a lot of sectors.
Sandip, what do you make of this entire wave of the travel fever which is coming back quite a bit? Rates everywhere of hotels are perking up. Flights are not available. Which are the stocks do you think one can still buy if they haven't to play this theme?
The theme is very strong, and both holidays, vacations, traveling. So in the travel segment, you have stocks on the PSU side like IRCTC benefits from, but then there the upside is limited. I believe that Interglobe Aviation is very well placed for the next few years. So it's had a strong run up. It's trading near 52-week highs, but I think next few years should still be very strong. We own Lemon Tree Hotels and Indian Hotels. We are not selling. I think both of them have good potential ahead. Especially Indian Hotels, with the kind of transformation it has done, the international foray it's planning to make both in Southeast Asia as well as Europe. I believe it could be significantly value additive over the long run.
Where are you traveling for the New Year's? What hotel, which airline have you booked?
You're asking me?
Yes, Sandeep, the question is for you. What are the New Year plans?
This time, no hotel and no flight. I'm going on a cruise.
That's even interesting. We don't have any listed player for that yet, right?
Actually, isn't a Z owners had a business, private business, into cruise. They cruised into the sunset with the business in fact cruised into the sunset. Well, a lot of private businesses of that group actually went in that direction. But yeah, there is no listed company in the cruise space. Delta has a very small business. They choose not to talk about it, that part. But yeah, Sula is talking about it, that they've done very brisk business in the Christmas weekend, and similar things are lining up for the New Year's weekend. I will be contributing in a very small manner to that up move of the stock. But how do you see Sula Vineyards? Every time I talk about somebody who owns a Sula Vineyard stock in their portfolio, Sandip, the example given to me is this. They ask me that, do you know that for every liter of whiskey which is consumed in our country, how much wine is consumed? And the answer is 1 teaspoon. But how much of that will get captured in Sula? Because Sula is the, masses are slightly higher than that. But the wine in India which is going around in the cocktail parties is the premium one.
Yeah, so you are more of an expert on that. I don't drink. But I think Sula is a well-placed company, but the growth there will be just around maybe 10-12%. So on that, people need to take a call on what kind of valuation they are willing to give the company. I would think that the valuations are not very attractive for new investments.
But what's the verdict on landmark cars? Would you like to play that theme or any other luxury end, whether it's ethos, whether it's some real estate player, or any other way you're playing the premium scheme and the luxury sector as well?
Not really. Like I haven't studied most of these companies.
And
Because
overall,
pure play, luxury plays are not there in India.
fair enough. But Sandeep, what about the auto space particularly? The recent commentary that we have got, whether it's about the launches or whether it's about the pickup, it's incrementally positive. And just, over the weekend, we'll get the data for the month of December as well. Of course, month on month, there'll be a sharp decline. But it seems like that at least the passenger vehicles and two-wheelers wouldn't have that sharp a decline. What's your view?
Yeah, so there's talk of inventory in the system and decline on the wholesale dispatches. But the good thing about the auto industry these days is because everything is so well monitored, so the inventory really doesn't grow. So if there's a built up, it gets corrected in 1 or 2 months. Overall, I would still think that the auto sector is very decently placed. But on the two-wheeler side, the run-up has been very sharp, so their finding value now is tough. On the four-wheeler side, M&M, Tata Motors, as well as I would think Maruti still could have upside.
Okay, point taken. On that note, Sandeep, we'll let you go. Thanks so much for making time and speaking with us. And if we don't speak before New Year's again, have a very happy New Year.
Enjoy your cruise.
Enjoy your cruise, exactly. And hopefully you cruise well in 2024 as well with better health, better winnings and better profitability.